Hello and a warm welcome to Advanced Audit and Assurance, your path to AAA excellence. If you're gearing up for the AAA exam previously recognized as the P7 exam, you're at the right place. In this video, we will walk through the past exam question. Get ready, we are not just studying the past exam question, we are unlocking the secrets to decoding the scenarios, finding numerous points we can make in the exam to gain marks easily, masterfully drafting answers up to the examiner standards, and skyrocketing your chances of success in the AAA exam. Stay tuned for game-changing insights that will transform your approach and elevate your ACCA journey. Let's go ahead. In this video, we would continue with March 2020 question number 1B part 1. But let us come back with a slight introduction. See, it is 1st July 20x5 today and you are the audit manager. And you are the audit manager in the audit department of Atlanta & Co., a firm of chartered certified accountants. You are working on the audit of the RIG group, right? Which has the financial year ending 30th of September 20x5. Alright, so it's 30 September 20x5 is the year end and today is 1st July 20x5. For the question, this information is sufficient. Now let us go to the requirement of part B1. And this is supposed to be an email from the partner, so it has the requirements in this exhibit number 1. Now let us read the requirement. Using the information provided in exhibit number 4, part 1, evaluate the extract from the component auditor's strategy, commenting on the audit strategy responses and ethical matters relating to the issues identified. You are able to understand? Let us read again. You are supposed to evaluate, that is, you are given with some information, you need to evaluate whether it is correct or not, or what is the implication behind that information. So you need to evaluate the extract from the component auditor's strategy. Okay, so the document which we are provided is the component auditor's strategy. Right, we have to comment on the audit strategy responses, the responses that the auditor has done or has planned, and we have to tell the ethical matters relating to the issues identified. It says 10 marks here, 10 marks. Sorry. And one more information. Now look, it's 1st July. The year end is 30th September 20x5 and it's the RIG group, right? And your firm is Atlanta & Co. Now let us scroll down to exhibit number 4 and see what does it says. Here we are at the exhibit number 4. See, the exhibit number 4 tells us the 3 points below are in an extract from the audit strategy prepared by Nigan Associates in relation to their audit of Darrell Co. Right? It's the component auditor, the Nigan Associates, and in the component company or the component of subsidiary is Darrell Co. Other sections of the audit strategy, including the audit risk assessment, have been reviewed by the group audit team and are considered satisfactory. So you do not need to consider them. Okay. The question tells us you do not need to consider them, means you are not supposed to work on that at all, except these 3 points identified in this auditor strategy. So let us read this one by one. See, issue identified by Nigan Associates, the first column, and the second column is audit strategy response by Nigan. So the first column tells us the issue which the Nigan Associates, the component auditor, has found or has identified, and what is the auditor strategy or response by Nigan Associates on the issue identified. Alright, so first is the materiality. There is some issue which is related to materiality in the first case. In the second, there is payroll, and in the third one it says sale of property. So there are three issues: materiality, payroll, and sale of property, which has been identified as an issue by Nigan Associates, the component auditor. Now let's read one by one. Materiality. Internet services in the country have been subject to considerable disruption. Okay, we have provided this information earlier. Now it says that the internet services in the country have been subject to considerable disruption. Okay, so what effects would that bring in? Can you think of any effects? Yes, if there is considerable disruption, clients would be lost, People would discontinue using their internet services, which are being provided by different providers, right? Now see, as a result of this, a significant number of customers have cancelled their subscriptions and the company is projected to make a loss this year. Alright, see, I told you, we identified that there would be a loss of customers, and it says there was a significant number of customers who have cancelled their subscriptions and the company is projected to make a loss this year. Now let's see what is the response by Nigan Associates. Sorry. It says materiality will be based on total assets for the first time this year due to the significant reduction in revenue and profit. My throat is not well, sorry. So it says materiality will be based on total assets for the first time, right, this year due to the significant reduction in revenue and profit. Okay, so earlier it was based on either revenue or profit, but this year it's going to be on total assets for the first time. Based on 1% of assets, materiality is determined at 1.4 million, right? In the previous year, materiality based on revenue was 1.2 million. So the materiality level has increased this year. Did you identify this point? Based on assets, the materiality level is determined at 1.4 million, but based on revenue, the last year it was determined at $1.2 million. So the materiality level has increased this year. Now see, you are aware that materiality is based on either total assets, 1% of the total assets, 5% of the profit, or 0.5% of the revenue. You are aware of these points, right? And over here, what we are provided with is, it was previous year based on revenue, and this year they are for the first time making it on total assets, because this year the company is projected to make a loss. But since it's a service industry, internet subscriptions, right? So based on the subscriptions, don't you think that this service industry materiality level should be based on revenue or profit rather than the total assets? Because based on the total assets, materiality is used where it is a capital intensive company or group, but this case it's not a capital intensive company, it's a revenue based company based on which revenue should have been used for materiality, or either, if not revenue, it could be profit, either of them, but basing it on total assets is totally different in this case. So let us draft this first point first. We would draft our answer by saying first that a percentage is often applied to a chosen benchmark. First, you're telling what is to be done, right? we're explaining what is done first. So a percentage is often applied to a chosen benchmark as a starting point in determining materiality, right, for the financial statements as a whole, right? First, we told how materiality is calculated initially, right? But now we discussed that it is not a capital intensive company and it should have been based on either revenue or on profit, right? So let us draft this point too. We would say we can say that it is acceptable. First, we would tell that this was acceptable to use total assets benchmark, right? Level of materiality, but now we would say further. However, we would explain further, right? Because everything needs to be explained in the paper, you know that. However, it is not a capital intensive business and therefore basing the materiality on on the revenue or profit would have been more suitable, right? Explain the point. And further, you could say that would have been more suitable for the rival, right? We linked it with the case over here. You see how we drafted the point. Now let us come back and draft another point for this one. Now see, we just discussed that basing the materiality on total assets should have been done where the company is a capital intensive company, right? And in this case it's a subscription based company, so basing it on revenue or profit would have been more suitable, right? But remember, over here, come here. See, it says that the number of customers have cancelled their subscriptions and the company is projected to make a loss this year. So, if you are trying to base our profits or our materiality level on profit or revenue, the company has faced a loss this year. So, won't you be able to take out materiality, right? Because there is no profit coming up this year. But we could say that the company could use an adjusted profit, right, or basing it on the previous year's figures also, and it could take a normalized profit figure for the previous years and this year and calculate materiality based on that, based on the adjusted figures, right? I hope you're clear with this one. Let me highlight the loss for this year, right? Now let us draft another point for this one, materiality. The first issue, let me give it a heading first because this is the first issue which we are discussing, materiality, and this is already given in the question as a head, bold text as a single issue, so we have made it prominent over here. Now see, let us draft this point now further, the one which we just discussed, that the company is a loss making company. We would say that the company has made a loss this year. This year does not mean that the materiality should be based on assets, right? Now we will explain why. It may be appropriate to use an adjusted profit figure it may be appropriate to use an adjusted profit figure. It may be appropriate to use an adjusted profit figure using a normalized profit before tax from continued operations figures based on the past results. Right? We just discussed this point earlier. We have drafted another point. Now, don't you think that this is another point for materiality which we have just discussed? Can you think of any other point? Let's come back to the case. See, read it. Read the audit strategy response and the issue identified by Nigan Associates and think. You need to brainstorm yourself. In the exam, you won't have time, You need to brainstorm yourself now so that while you're in the exam hall, you do not need to think further. You are able to draft your point immediately. Think of it. I hope you have thought of this thing, but now let me discuss the point which I have identified, and I hope you are able to identify the same point over here. Let's read this point now. Based on the 1% of the assets, materiality is determined at $1.4 million. In the previous year, materiality based on revenue was determined to be $1.2 million. We just discussed this earlier, that the materiality has increased based on the total assets rather than that based on revenue the previous year, that was $1.2 million. The company is loss making, and determining a higher level of materiality is not a wise decision. If the company would have been a profit making company, then there was a chance that materiality level could have been increased to evaluate more or to go into deep evaluation of the audit procedures. But over here, it's a loss making company, so increasing materiality levels would ignore many of the figures coming under the materiality levels. Right? So let us draft another point. We would say the materiality has been based or not based, the materiality has been set at a higher level this year The materiality has been set at a higher level this year. We could say the materiality has been set at a higher level this year. This is not in line with or we could say that this is not appropriate. We need to use the audit jargon. This is not appropriate given that the company is facing a loss this year, right? And has faced unusual trading conditions, right? Because number of customers cancelled their subscriptions. So unusual trading conditions with loss of many customers, right? Now how would we conclude this point? This indicates that the audit is likely to be high risk. This indicates that the audit is likely to be high risk. So a lower level of materiality needs to be determined, right? Needs to be determined, right? I hope you're clear with this point. Now we have completed the materiality portion. We have discussed in depth and we have written the answer in depth. So now let us go at the second issue identified, that is payroll, right? You remember that today is 1st July 20x5 and the year end was 30th September 20x5. So now let us read this point, payroll. From 1st October 20x4, right, that is the year beginning of this financial year, payroll accounting services were provided to Darrell Co. by Nigan Associates as an additional non-audit engagement. Alright. So, see, from this current year, 1st October 20x4, payroll accounting services were provided by Nigan Associates to Darrell Co. as an additional non-audit engagement. Now, what is your opinion about this point? Yes, familiarity risk of high income from the same client. So many points. You are absolutely right. Well done. Now let us read the planned audit procedure. It says, agree the total payroll figure estimated to be $6 million, right, from the statement of profit or loss to the payroll reports generated by Nigan Associates. It says just agree the total payroll figure of $6 million in the statement of profit or loss to the payroll reports generated by Nigan Associates. It means that the working or the service which Nigan Associate provided, the accounting payroll service, you just need to tally the figure, the total figure of that service is included in the statement of profit or loss as the same total figure or not. That is it. Don't you think that this is insufficient appropriate audit evidence or audit procedure to be performed? You're just checking that this has been included or not. And one more thing, it says $6 million because it's a figure given. You need to be alarmed that this figure is to be matched with the materiality level to determine that this is material or not. Now see whether the materiality level is based on the total assets of $1.4 million or based on the previous year revenue of $1.2 million. $6 million payroll figure is material to both the figures. It's a material figure, and we are just agreeing it with the payroll accounting service provided. The total figure for that is included in the statement of profit or loss or not. Right, it's not a sufficient appropriate audit procedure performed. Now see the other point. No further audit procedures are considered necessary. Come on. How could this be? The firm is saying no further audit procedures are considered necessary. Do you think this is valid point? Well, I really don't think so. You need to be skeptical. You need to be skeptical. So let us draft payroll now. Payroll. Right? How would we begin about this now? You would say the audit work planned on payroll appears to be limited because it's not performing too many procedures. So it's a limited audit procedure being performed. Limited due to the audit firm performing the payroll accounting service for Darrell since 1st October 20x4, right? We just reproduced the sentences given in the case, right? Now let us begin explaining this one. Let us continue in the same line. This will not provide sufficient audit evidence, regarding the $6 million, right, payroll expense, and we just identified that this is material. Let us discuss the materiality of this figure in the second paragraph. We are making short paragraphs, not so detailed, not so long paragraphs, always. Remember this thing for your exam. Now let us draft another point. We would say that the payroll expense not figure is material to the financial statements based on the payroll figure is material to the financial statements. We would say based on the $1.4 million materiality calculated by Nigan Associates. We are able to get what I did, right? And we would say that further testing is required because we were provided with information that Nigan Associates has determined that no further procedures were required. So further testing is required as it gives rise to an ethical threat to auditors' independence, right? Raised by the service, or raised by the payroll service rather, provided. I hope you are clear with the point I have made, that the payroll figure is material to the financial statements based on the $1.4 million materiality calculated by Nigan Associates. Further testing is required as it gives rise to an ethical threat to auditors' independence raised by the payroll service provided. Right? And we can identify another threat, that self-review threat comes in when the same audit team or the same team is working as the payroll accounting service and for the audit as well. So a self-review threat may also arise, right? So let us draft another point for the payroll figure. We could say there is a self-review threat arising by over-reliance on the work or on the payroll work performed by Nigan Associates, right, as a non-audit engagement. I hope you're clear. There is a self-review threat. Wait, let me think. I think add something more. There is a self-review threat arising by over-reliance on the payroll work performed by Nigan Associates as a non-audit engagement. As a non-audit engagement, as they are not planning to audit the $6 million figure, right? We just drafted another point. Now, what else can we think of? Let us come to the question. Read the question again, read the payroll figures again, and think of any other thing you are able to think of or come up with. Now, don't you think if this gives rise to a self-review threat, a threat to independence, there could be a discussion with the, management of Darelco that they should find another provider for the payroll accounting service. We are not able to continue based on the ethical threats arising. Right? So let us draft another point for payroll. We would say Nigan Associates needs to discuss the ethical threats with the management of Darelco and ensure they find an alternate service provider for the payroll accounting service, right? We drafted another point for payroll. Now with this, I think this is it for the payroll too. We drafted 4 points for payroll and 4 points for materiality. We have covered 8 marks up till now. Now let us come to the sale of property. Darrell Co. sold a small unused building located on the coast to the group CEO on 1st February 20x5, that is during the current year, for $50,000. The amount is still outstanding for payment. Okay. The group CEO is planning to use the property as a holiday home. So he is willing to use it as his own property as a holiday home, and he has bought it for $50,000 from the group on February 20x5. Right? It's a small unused building. Now what is the planned audit procedure? Confirmed $50,000 is included in receivables within the current assets. Okay, and no further audit procedures are considered necessary because the transaction is not material to the financial statements and local accounting rules do not require disclosure of this transaction. Now first thing first, that the CEO of the group has purchased a property from the group or from the Darrell and Co. for $50,000, which is immaterial to the materiality calculated of $1.4 million. But I hope you can recall related party transactions. The group CEO is a related party transaction. So this amount is immaterial by amount, but it is material by nature, because every transaction between a related party transaction is material by nature. So we would definitely need further work to be done on this figure rather than just leaving this figure as immaterial to the financial statements. And the other thing which you have provided is that the local rules do not require any further disclosure of this figure or of this transaction, but the group as a whole comes under the IAS related party transaction requirement, and this figure needs to be disclosed in the financial statements, and further audit work needs to be done on this figure, right? So let us draft our point for the sale of property. Now let us draft our first point. You would say the financial statements of Darrell Co. individually the financial statements of Darrell Co. individually do not require a disclosure for the sale of property to the CEO under the local accounting rules. Right, first you have identified point. Now we would say however, from group's perspective, this is from a group's perspective, this is a related party transaction and this needs to be disclosed in the consolidated financial statements. I hope you're clear with this point, right? Now, let us explain this further, why this is material, right? We would explain this in a separate point. So let us say that this transaction is material by nature, right? So the group audit team must provide instructions to Nigan Associates on the additional work to be performed which will enable them to obtain sufficient appropriate audit evidence. You are clear with this point, and we need to use the audit jargon. Please keep in mind, we need to use the audit jargon everywhere, right? Now, there is no work done on the sale of property that the proceeds are less or well below the market value, maybe or the materiality level, but there is no further information provided about the company or the Nigan Associates performing any further work based on the accounting treatment of profit or loss on sale of property, right? So we need to determine, or we need to draft a point for this one too, right? So let us draft a point. We would say that the cash proceeds arising on the sale of property to the CEO are below the materiality level, right? Materiality level, right? Now what we would say is that the procedures do not cover how the profit or loss on sale of property has been determined, right? And further we could say that the carrying amount of the property may be material to the financial statements. I hope you're clear with this one. We would further say that there is no information provided whether this transaction was it an arm length transaction or not, and whether this could be an attempt of window dressing the financial statements, right? So let us draft a point for this one. We would say that there is no evidence that the transaction between the company Darrell and Co and the CEO was an arm's length transaction, right? And we could say that we would say the payment is still outstanding, and this could be an attempt to window dress the financial statements. I hope you're clear with this point too. So now look at our answer. We have drafted 3 points for materiality, right? But we would gain 4 marks out of these 3 points. Then we have drafted 4 points for payroll, with each point carrying 1 mark, so 4 plus 4 makes it 8. And then for sale of property 1, 2, 3 and 4, 4 points we have drafted for the sale of property. So this brings in 4 plus 4 plus 4, 12 marks out of 10 marks to be gained in the question paper. So you see how you are able to draft more points in the exam, in the actual exam, and you are supposed to cover up lesser marks or fewer marks out of those complete points. So you need to brainstorm yourself, you need to think well, and you need to stay tuned to your studies and focus on your studies. Brainstorm yourself to think of as many points you are able to draft and think, so that you are able to cover up the maximum marks available during the exam. Alright, now with this we end at this lecture, and we will come up with the next part in the next video. Alright, take care. Towards the end of this video, you need to remember, greatness doesn't happen overnight. It's the result of continuous effort, boundless curiosity, and a thirst for improvement. Investing time in these videos and engaging with past AAA exam questions is an investment in the brighter future you're shaping up. Keep your focus sharp, your learning continuous, and your eyes focused on your goals. Best of luck as you navigate your studies. May your dedication lead you to success in the AAA exam.